Martin from Secrets, the channel for learning about trading and investing. Welcome to another episode of Markets Tomorrow, the daily stock market analysis show where we look at what happened in the market during the day and how we can plan for a better trade. Right. So, what a day we had today. No? One of the rarest of rare bull move day. The markets made 2.6% nearly. Right. It was a big, gigantic, terrific move. Let's see what exactly happened and try to learn something from it. So look at the candle size, right? This is open is equal to low candle pattern, clear wide range bullish candle, and the 446 points single day gap up move. Banknifty, look at this. Gap up and open is equal to low pattern, 4,260 single day move. It has engulfed all the 3 days, previous 3 days, including another bullish candle, completely engulfed Banknifty. Similarly, here you can see that previous 3 days completely engulfed. It's a bullish engulfing pattern. Clear gap up, and that gap was caused a support, and it is back. It has taken out the previous swing highs also both. Right. So let's get into it and see the numbers. So we have intraday price action. If you see, it was kind of trending up more. So if we look at the 15-minute charts, look at this. They're all 15-minute candles. There is non-stop up moves. Nifty and Banknifty both. That's the intraday price action. And weekly, interestingly, if you see weekly candles, that is also almost conforming in an engulfing pattern. And monthly also, the month is concluded today. It is also conforming the previous engulfing pattern. That means it confirms that it's in for a rally, breaking out. So now look at the July month and August month. July month was engulfing, and this is confirming that. If it had closed below this previous month, then we could have negated, but this is a clear confirmation of a trend. And let's look at another view and see how this is the famous trend line that we are talking about all these days, right? Look at this. Nifty has already cleared that, but Nifty was on the edge. Now it is closed almost above. So it shows that we are back to the breaking out thing, right? That's about the trend line. Previous 2 single highs were taken out today. There was small swing highs which are all taken out here at these levels on both indices. Terrific move, no doubt about that. Let's look at support resistance levels. And another thing is that yesterday Fyers did not sell too much. Only small selling in spite of big 5% down move in the US markets. And US market fall 5%, we just had 1.5 kind of small move, down move, reaction to such a big global bad news. We didn't we fall down 4.5 nearly from the top and then bounced up. That's how we closed yesterday. So that itself probably was an indication, but nobody could get that right because nobody expected this kind of a move. Right? After the yesterday's candle, nobody expected such a big move because this was a downfall and a bounce. So it may consolidate here is what I expected, but that never happened. That bounce continued ferociously is what happened today. Even I had a mild bearish view yesterday. I thought there was consolation that may be happening, but today this violent move upside nobody would have expected, neither from the price patterns nor from the open interest, nothing. That's how markets behave sometimes. So 17,992 is the resistance of the upside of the Nifty, 18,115 the resistance up to that, then 39,760 the resistance on Banknifty, previous swing high, 40,160 previous swing high after that. 17,380 the support, the gap that is formed, and 16,948 the gap support after that. 38,400 previous swing low and 37,950 previous swing low. Both are supports on the Banknifty. So we are talking about primarily the resistance would be here on the top, right? the swing highs, and supports would be, so this is the 200 EMA, this is the 20 EMA, a red one, brown one is the 200 EMA. So that is the second support. First support gap is, so maximum it can fall only. So there's a question of falling. The only thing is, since such a big move has happened, there may be some consolidation before it breaks out, most likely. Right. Bollinger bands are contracting, but slight move has started. Expansion has started. Here there is a bend that you can see, small bend that you can. That means consolidation is now slowly turning into a bullish up move. Is what Bollinger bands are indicating. So bullishness in the momentum, right? Momentum indicators has turned to be bullish. Back, it had slipped to the sideways earlier, both indices. Trend is also close to multiple zones. You can see clearly the trend is crossed over, but it's flat strength or downward strength. It may take some more days to further pick it up, but the trend crossover has happened on both the indices. VIX has cooled off, but not much. 18.7, 5.5% of cool off has happened. Very close to 20. So be cautious on that. Long build is what futures of OI is showing. Options OI is showing highest put rating that is exceeding the call rating. It's at 38,000 on the Banknifty and 41,000 on the call rating on the Banknifty. And interestingly, the Nifty, day after tomorrow's expiry, September 1st expiry, 17,000 and 18,000. 1,000 point is a range between the highest put rating and the call rating. That is very interesting. So, if Banknifty clearly showing bullishness, Nifty call rate is a thing that there can be more fluctuations that can happen. This is for the September 1st weekly expiry. PCR is clear bullish, 1.32 and 1.49. Clear bullish, no doubt about that. So all the sectors performed today. Biggest performer was probably realty and IT sector was performing 3% plus. Right? So 1 to 3% of moves happen in all the sectors, and FMCG, auto, metal, reality, all of them maintain the bullishness in the short term. And on the daily charts, heavyweights, all heavyweights performed. The most bullish is Easy Bank. HDFC, all the banking stocks performed did more than 3% of up move. Right? And across the heavyweights, 1 to 3.5% of up move has happened. So, Fyers data has not come in. Definitely, it is buying by both. That might have happened today. Data has not come in yet, but it has to be institutional buy. Otherwise, it cannot move this much. Crude oil is falling slightly sideways, moment is word, but it's less than 95, less than 100 we can say. And dollar index is falling. That's good. USD INR has cooled up a little bit, 79.5, but rupee still at the weak levels. And gold is also falling, crashing from the support zone. SGX is flat as now. US index green, but you'll have to see the next day. Basically, US index has fallen from the support zone, and you can see that you have to be slightly cautious and cautiously watching this, because there is every likelihood that it can fall back into the trend line channel on weekly charts. Right now, it's in a reversal mode. A green candle after such a big fall has happened. This is a 1,000-point fall that has happened on the Dow Jones. So some consolidation may happen, but there is every chance that it can. So unless and until it climbs back, because this is a very bearish pattern, shooting star kind of pattern. So it has to climb above this resistance zone before we can relax. Until then, the rest be cautious. So big moves in the US markets can take us back to where we are. So we have to be closely watching that. And the major events is that tomorrow is holiday. So truncated week expiry that's going to happen September 1st. GDP data is also coming tomorrow. So market may react to that on expiry day. Added volatility, so you have to be very cautious. Stock picks NTPC long, right? So a trend, momentum trend, everything is bullish, and it's in a trend line channel. Good RiskReward could be there. Lot of space is there on the upside of the channel. So Federal Bank also is doing great. I'll just quickly touch upon these two. These are swing trades, especially not just for intraday. So if you put a stop loss here, we can get good swing because it's a channel, trend line channel on the weekly, and there is a lot of up move expected. There can be a breakout that happened. The entry has been made after the all-time high breakout happens. Only then we have to enter. Federal Bank, all banking sectors. DBC is a Government of India 51% stock. Federal Bank is a private sector bank leading, and it's breaking out those candles. Solid up move is expected. It's already started. Breakout has already started, but still you can still catch up on a small dip or something. Okay? So it's a swing trade, not a intraday trade, but it's a stock pick for the day. So just to wrap up, September 1st, Thursday, day after tomorrow, market view is mild bullishness. Basically sideways is what I expect, but some up move can be expected, because sideways only because of the factor that the 2.6% is such mega moves happens once in a while. After that, normally it consolidates or cools off a little bit before it decides on the next one. So, okay, so clearly even today's move indicated that it is no longer going to plan to go down that easy into the trend line channel as everyone was expecting. That's not the case. Some consolidation is clearly indicated by the Bollinger Band, so probably it may zigzag like this up and down within that consolidation period. Big moves up, then big falls down. That could happen, or it could break out clearly. So for that, the Bollinger Bands has to expand and the price has to climb on that. Until then, we will not be completely sure. The breakout is still not fully 100% confirmed on the weekly trend line on the Nifty if you see. So on the edge, it's closed above that, but breakout is yet to be watched for the next week. The cautious on that, US markets are kind of bearish. A lot of factors for us to be cheering about. Fyers are not selling that much. PCR is good. Price patterns are indicating bullishness. Candlesticks, everything is bullish. So this is not for bulls. This is happening in the monthly charts here to see. July and June candles itself tells the story. There may be intraday volatilities and all that, but month-wise, if you see 2 months have been big up moves have happened. So that is most likely to continue is what today's move is indicating. Only worry is the US market, how it is going to react to the Jackson Hole outcomes and next Fed rates and all that, recession fear and all that. So uncertainties are still there, which is not cooled off too much. It's 18.5 something, so it's not that great. It can anytime spike up about 20 and then throw things down. So you have to be cautious. Go for long and short trades depending on the levels where there is high probability of halting or reversing or breaking out and all that. Take your calls based on that, put tight stops, and then that's how you always have hedge positions so that you don't risk too much on our right moves. Right? So that's a view, mild bullishness, two sideways combined. That's what my view for the next day, right? Trading day, so next trading day basically, right? Hope this helps you in some way. If you think you like it, consider hitting the like button. Share to maximum. Subscribe if you're not. Put in comments, feedback, and all that. Right? Keep us motivated to keep doing this, and we have a few subs appreciated to help us. Thanks for watching. Happy trading. Happy learning. Bye.